It's 1 p.m. on a trading day. Time to do 55 minutes of business. Here's what we have prepared for you. In Zimbabwe, there are more profits to save. Interest rate has been increased. And de-dollarization seems to be getting traction. Russia and Ethiopia have decided to trade in domestic currencies. In South Africa, consumer spending shows that 57% of income is spent on transportation and electricity. Welcome to the program. I'm Ini John Mekwa. Let's do business. Starting from the global space, we tell you that oil prices rose marginally in early Asian trade on Friday, but we're on track for a third straight week of decline. And of course, it's because of President Donald Trump's renewed trade war on China and threats of tariff hikes on other countries. Look at the numbers now. 15 cents is what was added, and that's 0.15%. $74.44 a barrel. WTI has even more, 0.9% in the green, $71.70 a barrel. And we know that even though oil started on a high note this year since President Trump's inauguration and pronouncement that it has started what is now being called a trade war globally, we've seen a lot of hit on oil prices and supply, and of course on prices settled lower on Thursday after he repeated that pledge to raise U.S. oil production, unnerving traders a day after the country reported a much bigger than expected jump in crude piles. Move to the metal space now. Gold prices rose today on Friday, hovering near record high levels, set for a sixth consecutive weekly gain as trade war concerns fueled safe haven buying ahead of the key U.S. payrolls report that's expected later on today in a couple of hours. So we see spot gold in the green, 0.4%. 2,800 seems to be the new resistance level now. So it's 2,867.69, while 0.5% in the green. Big recovery compared to the numbers that we had yesterday about this time. $2,889.80. Spot silver 0.2% in the green at $32.26 a barrel per ounce. Platinum 0.6% in the green, while palladium is the odd one out. At this time, it's down 0.2%, $976.25 per ounce. Focus now is on U.S. employment report that's due about 1:30 U.S. time, which investors will scan for any hint on the U.S. interest rate cycle to see how the reserve may do. I come to Nigeria now. Members of Nigeria's financial inclusion centers, that's the FIC, say they are working towards a more rounded service to accelerate inclusivity in the country. The president of the FIC Professionals Network PLC, Mr. Sholabi Kesteth, who was a guest on Business Morning, is asking Nigerians to expect the rollout of various services soon.
Only 3% of businesses in Nigeria have access to credit, which is fundamental to economic development. So we're now moving into a phase where we're going to be having a new category of POS agents. We call them financial inclusion experts, but there are parties that you can approach, and if you're a small business, you can go to request if you can access a loan, if you can access to lease equipment and get liquidity for your business. And there will be as plenty as POS operators as we have them all over the place in Nigeria in the coming months. And that will help us to deepen financial inclusion. We're also talking about pension, we're talking about mortgage, and we're talking about e-commerce as well. And so this specialized new category of POS agents who will be certified by the necessary institutes, the Chartered Institute of Bankers, the National Institute of Credit Administrators, Nigerian Interbank Settlement Scheme, NIMC, Data Protection Council of Nigeria. All these people, they will train these individuals so that a lot more small businesses in Nigeria can start accessing loans, grants, credits, leasing facilities that can help them to grow their businesses and Nigeria's economy.
Yeah, so perhaps we should expand that conversation to look at other parts of Africa, discussing intra-Africa payment system solutions. And we have right here in the studio, Director of Technology Accounts Management at MasterCard, Lara Randall, right here. Good afternoon, Lara, and welcome to the program.
Thank you very much. Thank you for having me.
Good to have you. So we're just that was someone talking about. We had the conversation this morning about financial inclusion. That's your space also. Would you say we are making traction? We are making gains in the area of financial inclusion in reality in Nigeria?
I will say yes, we are definitely making strides in the market. There have been quite a number of innovations over the last couple of years. We have payment gateways available to the market now. We have mobile money in different parts of Africa. We also have agency banking in, for example, Nigeria. Agency banking was created pretty recently to serve a niche, but it has become such a big deal in the market now. There is almost no one who is not being served by agency banking.
So, but when we talk about intra-African trade, we seem not to be moving very fast in that area.
True, there is that. Now, you see, the thing is, in each country within Africa, they have what is already working for them. There's mobile money. We know M-Pesa, for example.
I think that's the most popular.
Absolutely. We have, and then there are other types of mobile money options available. You have the card schemes as well, that issue cards people can use to carry out transactions. There are payment gateways as well that offer account-to-account transfers. But you see, there is limited interoperability across countries. And so what you find that is working efficiently in one market is not necessarily working. You cannot replicate it in another market. So for example, the infrastructure that you need to replicate something somewhere is not available. The regulations as well are also different.
But that should be easy. We have platforms like AfCTA, the African Free Trade Zone, which everybody has agreed to. Dealing with regulation, infrastructure might take time because of funding. But when you talk about regulation, it sounds like that should be easy because we are already in agreement to have this platform. And this platform requires intra-nation payment systems.
So I think two things. I think that because the different countries have their own regulations, getting the regulations to blend has been a bit of a difficulty. What one country is willing to accept as a payment platform is not being accepted somewhere else. Okay, that's one concern. Then the platforms as well. The platforms are not beyond the underlying. There must be an engine that is managing the transaction, and we do not have those engines available. Like I was trying to say, because of the interoperability, you cannot converge all the different payment platforms into one, and so that's why there's still that difficulty, even though we have the exchange already available.
So it sounds like that's ECO, that's common currency. It sounds like it's not going to work in a very, very long time.
It will take a while to go live. It will take a while for everyone to accept it. Yes.
Okay. So now that we have these difference in infrastructural development, difference in regulations, but we still need to trade among ourselves. What do you, as an expert in that area, suggest that we embrace so that this is not hampering the trade which we should be doing among ourselves?
There are a couple of things that we should be looking at. Right now, a lot of the payment platforms work in silos. We need to work collaboratively, right? And then I bring in my
competition. You are from one competition, so I'm sure people like you would refuse to work with a competition, and perhaps that's why we're having these challenges.
And not necessarily, because I am firmly of the opinion that the more people you're able to bring to the table, the bigger the pie you're able to share. Right, that's what I believe. I believe that when we work in silos, you're not able to, you're concentrated on one pie, and that's where your body and blood and everything is going to. But if we're to come together to work, we will be able to do more. So I think that collaboration is important. I think that it's important for regulation as well to come in. There must be regulations that would foster innovation. We cannot, the rules between, for example, Nigeria and Kenya, Nigeria and South Africa, there are differences in the regulations, and those things need to come together for us to be able to.
Where should we meet? Is it ECOWAS? Is it after Secretariat? Where do you think we can meet for these conversations to be, like a melting point for the countries?
So an organization like AfCTA, for example, has created that settlement platform, and I think that someone like AfCTA,
is it the PAPs?
should leverage PAPs to drive trade. And then because they have been created for a purpose, they must be empowered to create regulations that will drive trade across the different countries, and they would be supported by the different central banks in each of those countries to carve a path for easier trade across. I also think that we should also look at things like invest a bit more in research, invest a bit more in awareness, because there is already existing infrastructure today or technologies that people are not making the best of. There must be a bit more awareness around what payments platforms are available to drive trade.
Yeah, because I wanted to say, at the time when PAPS was launched, there was a whole noise about it, but at this time it doesn't sound
I haven't heard about them in quite a bit, unfortunately.
Yes, it is, and that's supposed to be a solution for us. So perhaps there needs to be more enlightenment, you think? Or
more
something?
Enlightenment. So I will just sort of deviate slightly to say one of the things that I had done in the industry was that when the bank I used to work with wanted to start to issue contactless cards, I was the one who drove the implementation of that technology. So pretty much all the banks in Nigeria today are already issuing contactless enabled cards. And if you were to travel outside of the country, the card would work when you tap the card on a terminal, but you don't have a lot of acceptance devices in Nigeria to tap your card and do contactless transactions. A few years back, there was this video that was viral on WhatsApp where people were saying if somebody should bring a terminal close to you, they can do a transaction successfully and take your money away, right? But that's not true. That's not how contactless technology works. There's a lot that has been done around security, around contactless technology, and so there must be awareness, whether for contactless, whether for any other type of payment platform, there must be awareness around the security and how people can use it properly.
Yeah, because now talking about AfCTA, we've done our first shipment to Kenya, that's as Nigeria, and we're supposed to see small businesses begin to get on the platform and trade. But if these challenges of payment solution or lack of adoption of these systems or skepticism around it, then we might be losing out of something we're supposed to be getting.
Yeah, so again, interoperability is a big problem. We need right infrastructure, we need regulation to help us drive, and then we need a lot of public awareness to drive payments as well.
What do you see as the payment trend in emerging markets in the let's say this year, 2025?
Ooh, I see more payments platforms or payments gateways being made available and more accessible to the public, so that a one-man business can have their own payment platform and offer it to customers, to make payments. Apart from that, we see account transfers being a very big deal as well. That's here to stay, pretty much. We also see that more parties would focus on local relevance. As countries are niche, everyone has their cultural complexities, and so because of that, what works in one country will not necessarily work somewhere else. I foresee that the payment platforms or the payment schemes would focus more on domestic relevance in the market to drive scale.
Yeah, I hope Nigeria doesn't miss out of all of that mix. I guess we have the skills, the personality, or personnel, to drive that. So the only thing I doubt is the infrastructure, which is always our weak point. But thank you so much, Lara Randall, Director, Technology Accounts Management at MasterCard.
Thank you for having me.
Now, let's take a break now. When we come back, we'll head to the market, see how this week has been at the market right here on Business Incorporated. Join us again. Welcome back to Business Incorporated on Channels Television. We head to the markets now to look at the numbers. And thankfully, yes, we still have the green color right here. But, the addition there is not so much from what we closed with yesterday, 105,000. I know we had like 400 here, so not so much. But I guess we should celebrate the little wins. And it's 0.10% in the green. Let's delve more into the Nigerian market this afternoon. We have right here in the studio Mr. Mukhtar Mohammed, the Chief Executive Officer of Finance with Mukhtar. Mr. Mukhtar, good afternoon.
Good afternoon, my pleasure.
Good to have you. So yesterday we saw a green market at a close, and then we have some stocks. I know the Fugas, the finance guys are driving the market. They drove the market yesterday.
Yes.
Yeah, but they are not alone. Eternal Oil also gained 3 naira yesterday. Sometimes I just wonder, do investors just stay and then just decide, today I'm going to feast on MRS, tomorrow I'm going to...
I think it's based on the in-market information that you've seen, especially with Eternal Oil. When you look at that sector now, it's like the cheapest stocks in that sector. And that's why investors are doing what we call price comparison analysis. Look, Eternal also, the result was fantastic, was good compared for what they did before. And with the deregulation of the sector and the war that has happened, the price war,
the price war
between NNPC,
so that is actually good for, because we see MRS also is there, and then Eternal Oil almost 10%.
Yeah, MRS is the number one game changer. Remember that they are the direct
connection to Dangote
refinery, so they supply to every other person.
So I expect them to do even much more, or maybe
No, you see, there's a price war. It's not everybody that will patronize the MRS. And if you go through town these days, you realize that the MRS filling station have the long queues these days. Most vehicles are queuing up there. So it's now, if you look at the most of them, the patronize maybe from MRS, you realize they are selling at 970, and those stations seems to have more fuel. And then the NNPC is on their own selling at 960. And so the price war is just about to begin, and that's the beauty of deregulation. But then, coming to the market, we expect all this to turn to positivity in the long term for MRS, Eternal Oil, and especially marketing companies. Now, we might not see that fantastic thing in Total, because you realize now Total now will be thinking they are not among the dealers. They have to deal with the NNPC. And if you look at their price is also a little bit higher than what you normally have. So,
but O&O is doing well, maybe because of their results. I know they released their results recently.
O&O is one stock that is becoming, maybe the more you see, sometimes you want to understand. And then
because they're just giving out additional 1,000 shares.
And if you look at the additional 1,000 shares they are giving, you look at the sharing formula from this date.
Yes,
so
if you have 12, you can get extra one.
So it takes investors need more information on that. Yes. But I think what's driving O&O has to be the acquisition. They are not in the downstream. Obviously, they are no more in the marketing sector. Again, they own Notify. They are more in depth in the exploitation sector. So a lot of crude oil sale, a lot of remember the investment they bought in from Egypt. So investors are looking at that. They are also trying to buy. I think they're also getting, let's say, somewhere outside the shore of this country. Also, they are bidding for some oil block. So those are what investors are looking at. But again, sometimes you now look at the numbers that came in. All of a sudden, investors expect that shareholders' funds should be positive, or shareholders' funds become negative. So sometimes you don't understand what's happening.
You don't really understand. But one thing that pops out at me in all of this is the investing public has to be educated. And investors have to intentionally go out there to get information, because these stocks that we see, they don't just happen. People get into them because of what's happening in the real sector, and that feeds into their movement, their prices, and the possibility of making profit or not if we invest in them.
Yeah. Definitely. I think the good thing about it, I'm so excited. And the last time on your program I said it, I'm excited because it's Nigerian investors that are driving the market now these days. We are seeing...
But I heard foreign investors are coming back.
They are coming back. And that's why
drive them away?
No, we shouldn't drive them away. We should now begin to excitedly welcome them, because they will help us boost the price and make us create more wealth. If you look at, like what you are saying, investors are beginning to drive, because they are locals. Then some of them look at the local terrain and look at what is happening, and then they are able to drive it. But the unfortunate thing is that when you look at the Nigerian stock exchange itself, how many Nigerians are really creating wealth? There is about 0.07%, so it's very low. So you are not seeing those numbers, wealth creation, trickling down to everybody. But again, like you said, good information flowing through the market, and a lot of investors are using that to begin to invest.
And if we could see, yes, the week-to-date performance, all the sectors are in the green. So I guess even insurance, we don't have insurance here, but I do know insurance is 0.63% in the green. So the penny stocks are also getting attention.
Insurance are getting attention because of the price.
Oh, is it because of the third party?
Yeah, you see the price, then they thought the recent policy of
the third party enforcement and all of that.
You are seeing that. Even before then, you saw those prices being moved because of the penny nature, like you rightly say. A lot of trading happens in the insurance sector, which is fantastic for the insurance sector. That is a sector that most investors have waited so long to see those bullish run. Remember the recapitalization. We might have that recapitalization again. If you look at the insurance company, you need basically maybe 3 or 4 companies that are really paying dividend to investors, that the results are always fantastic. Some of these companies, when their result comes in, is not commensurate with what you expect. But again, because of the price, a lot of people are playing in that sector. Like you pointed out, that has been positive. The banking sector, of course, has been very, very positive.
That's the most liquid.
That's the most liquid. That's the cash cow. And you and I know why, because of the recapitalization drive, the oversubscription. We got Fidelity came out with a report. They might also
Stanbic is doing well, even as we speak.
There's so much to unpack in the banking sector. So a lot of investors are looking at that sector, like the sector that is really going to tick this year. Remember, the 1 trillion economy can only be driven by the financial sector, and the government is so particular about that. Industrial good, we are beginning to see those numbers coming positively, like you said. But again, you know they have their own challenges, and that FX challenge is still
we hope that this year, seeing the stability of the naira so far, perhaps we won't talk so much about FX losses.
I don't know why people say the stability of the naira. I don't know how stable the naira is.
We've been
so
below 1,006.
I like using this word. I think we're in the corridor of stability.
Oh, okay.
It's not other than just saying, oh, the stability. If it's stable, that means I can buy today at 1,000. After today, the opening price of 1,490 official price. So there's sometimes you see it open at 1,500. So let me say we are in a corridor of stability, which is good to plan that corridor. You can plan with that corridor. To attain stability, that means for the next 6 to 7 months, we should be at one particular price. And that is stability for me. For going today, here and there, now, it's more or less like the stock market. You can't say we have attained stability. Like you said, it 105 just now, and sometimes we might drag into 104, and that. So we've not moved on. Support level before now was 100. Now it's moved to 105. It seems to be the support level. So you can't say so that relative stability is there. Consumer good, of course, the Nigerians are beginning to adapt. You know, we know how to adapt now. We know price of goods are high, so we are adapting to what we can consume and how we can consume. The oil and gas sector, you know why it's still in the deregulation. We have some big players there. And we hope this year we'll have 2 big player comes to that sector, that will deepen the market. NNPC,
It seems you have heard something you haven't told us.
I hope, because NNPC told us that they will be in the market before the end of this, I think second quarter of this year. So I'm just thinking of that. And then Dangote already told us that he will be bringing his refinery before the end of, I think second quarter too. So those are the big, if those two big fish are in the oil and gas sector, that sector will be a sector to watch out
And then
for.
the market cap would just increase. I can't wait for that.
You see, sometimes people are excited about the market part, but as an investor, I'm not excited about the market cap. I'm
Why?
excited about what is my portfolio doing.
But I mean, the market cap is captures your
The
portfolio.
market cap can just capture, because now you list NNPC and Dangote and you dip in the market cap, and
And
yet
then you have
my
not-
stock is suffering.
What about the fixed income? How has it been this week, and what do we expect?
I think the fixed income was down. I mean, the treasury bill space was down during the week, but you know, with what you are seeing in the banking sector, then you're looking at the global challenge. You know, the fixed income space is largely played by foreign investors, especially when they see that we are giving them good returns. The exchange rate is good. So, but you know what is happening in the global economy? There's a new order being brought in by Donald Trump. So everybody is still beginning to work. So what you see in the fixed income sectors are mostly Nigerians that are playing those sectors, looking for safe havens to put in there. So we are most
Do we expect yields to remain elevated this year?
I think we will have.
And you know, the president has increased or proposed to increase the budget because of the expectation of more revenue. Perhaps that would reduce, you know, the availability or the participation of FG in the market.
Maybe, but again, we have, why you saying that sector is doing what I say, wait and see, is the Monetary Policy Committee. They need to watch that space. What are they going to do? Will they still hike rate? Will they still maintain rate?
It's 17th, I mean, 17, 18.
So what is going to be, when their next meeting, anytime soon? So I think that's what drives the fixed income space. What really is coming from the monetary, from the CBN in their next meeting, that will be the key driver of the interest rate this year, and especially the fixed income space. That will give investors a perception of what to expect in this year, and then you might begin to see movement in that space. But for now, that space is just doing wait and see.
Wait and see. All right. Thank you so much, Mr. Mukhtar Mohammed, for your time this afternoon.
Pleasure, always.
All right. Now let's look at other markets in other parts of, well, first of all, Africa, because we only did Nigeria there. So we see what happened in intraday for South Africa. It's positive 0.67%. 87,776.75 for Egypt, which is closed today. Close positive 0.93%. Huge move we see there as Egypt. I know the IMF, they're supposed to have some intervention from the IMF, and they are also top of the news. So perhaps all of that is moving into investor sentiment. And then for Nairobi, Thursday closed 0.52% and lost 132 level that it had at the close of Wednesday straight. Curious thing right there going on in Kenya. It would be good to put an eye there. Let's look at other parts of the world. The Middle East at this time, Dubai is negative 0.48%, Abu Dhabi is positive 0.17%, Saudi Arabia is positive 0.15%, while Qatar is negative 0.39%. In the United States, stock features were just a little change in early trade. The jobs data expected in a couple of hours. That's where people or investors are looking at to determine how the trading day would be. So we see Dow Jones slightly down 0.04%, S&P down, the Nasdaq also down 0.12% for them. Extended trade, Amazon tumbled, lost 4%. Guidance from the e-commerce giant disappointed investors as Amazon called for revenue growth of 5 to 9% in the first quarter. That's the weakest growth on record. And then during Thursday's trade, a main trading session, the S&P 500 went up 0.4%, Nasdaq Composite, and that's for yesterday 0.5%, because you know it's still early hours right there. This is the features, but at the close of trade yesterday, Nasdaq added 0.5%, marks the third winning session in a row for that, and all three major averages are on track to finish the week with modest gains. S&P 500 is on pace for a 0.7 advance, Nasdaq 0.8, and the Dow is lagging with a week-to-week date climb of about 0.5%. Now we see Asian market, which of course is closed at this time. The Nikkei is deeply in the red, 0.72%. That's in Japan. The Kospi of South Korea is also red. Hang Seng seems to be on the flip side. Yesterday that was the only red we had on this space. So today they decided to make up for yesterday, 1.16% at 21,133.54. Looking at other parts of India, I think they're going to have either their budget presentation or the MPC. So a lot of eyes on India at this time. We're seeing that the market is, however, green now, but Shanghai is even greener than that, 1.01% at the close of trade. Now, still on the market, but now heading to Germany to see what's happening there. Not very good news, I hear, because Germany's economy could contract by 0.5% this year. Wow. That's according to the country's Chamber of Commerce and Industry. Let's hear what Chip is going to say about this. Hi, Chip. Good afternoon. This doesn't sound like good news. I don't know if you can escape this. This is going to be the whole economy. I hope it will not touch you one way or the other.
Good afternoon, Ini. It is not good news for the German economy, and we have for a while been used to getting bad news about the German economy, so it's sort of more of the same. And the German Chamber of Commerce and Industry is actually basing that projection for the 0.5% economic contraction this year on a survey in which 23,000 businesses participated. So it is really about the business sentiment. And its economic outlook is actually worse than the German government's. Last month, the economy ministry said Germany's GDP would shrink 0.3% this year. Now, the Chamber of Commerce is calling for comprehensive economic reforms from the federal government of the future. That is, of course, because Germany is currently gripped by election fever. And unfortunately, though, the focus in recent weeks hasn't been the economy, but rather migration. In fact, last weekend, tens of thousands of people took to the streets of major German cities to protest against the fact that the conservative Christian Democrats accepted the support of the far-right AfD on a migration bill in the Bundestag. Now, the debate on migration in the German Bundestag last week also showed that the major parties here may not be so willing to compromise on issues, and that could mean that it could be harder for a government to be formed after the elections.
Yeah, political, quagmire there, breaking into the economy. But what's the breakdown? What are the details of this outlook that's not looking so good?
Well, the fact is that the government estimates that Germany needs 400,000 skilled workers from abroad every year. So the migration debate is very much linked to the economy, and the German economy is losing billions already because of the lack of workers. Now, one estimate shows that if every job vacancy were filled last year, Germany would have added about 49 billion euros to the economy. Now, that's an additional 49 billion euros to be precise. Now, that's why the government also loosened immigration restrictions for skilled workers in recent years. And despite that, it is much easier for professionals to migrate to Germany. The ongoing discussion about Germany's asylum and refugee policy may be making it less welcoming for skilled workers. Now, that means that anyone who is perceived to be a foreigner may end up facing more hostility and discrimination across the country. And this week, a couple of leading CEOs warned about xenophobia because it could make it harder for companies to recruit from abroad for workers that they need to be more productive. So the question is whether Germany can strike the balance between having a much needed discussion on migration while also ensuring that foreign skilled workers still feel welcome here.
Yeah, migration, the economy, always linked right there. But let's look at the market. How's European investors? How are they reacting to all of this in the markets?
Well, European stocks are trading slightly lower today, and that is, of course, coming off the back of a record close in Thursday's session. Now, it does appear there that traders are more relaxed about the trade tensions between the U.S. and China, and what they're waiting for today are those payroll data numbers from the US that you mentioned earlier that will help provide some direction. The expectations are that US jobs growth lost momentum in December. Now, here in Germany, we also had some data of our own. The latest export figures show that exports fell 1% on the year last year. And that is despite an uptick in exports in December. Now, China's aggressive industrial policy may be hurting German exports, and the prospect of U.S. tariffs, of course, isn't helping either.
Yeah, unfortunately, but well, thank God we have you guys there to always keep us give us updates on what's going on there. Chip, thank you so much for this update, and do have a great weekend.
Likewise, Ini, have a good weekend. Thank you. Cheers.
Now let's come back to Africa. Well, this is more global because reports indicate that countries worldwide seem to be increasingly shifting away from the US dollar in trade, opting instead for national currencies, and that's to reduce reliance on foreign exchange and enhance economic stability. Russia and Ethiopia are among the latest to embrace this trend as they begin trading in their respective currencies. Ethiopian ambassador to Moscow, Janet Tesho Jiru, highlighted that while the transition is still in its infancy, both nations are committed to expanding the practice. The ambassador is stressing that conducting trade in local currencies offer financial advantages regardless of external factors such as international sanctions. Even if there were no sanctions, trade in local currency, he says, is always very profitable. He explained that it eliminates transaction costs and shields businesses from the volatility of exchange. The decision by both countries to trade without a dominant global currency reflects a broader trend towards economic independence and risk reduction. Russia's expansion of trade partnership using national currencies strengthens its economic ties with Ethiopia, reducing reliance on third-party currencies. The African Development Bank, that's the AFDB, has committed $2.5 billion equivalent, that's equivalent to 6.4 trillion shillings towards the development of priority infrastructure projects across Tanzania. A state issued by the East African Community and signed by the Corporate Communications and Public Affairs Department's Senior Public Relations Officer, Mr. Simon Waka, reveals that funding will be directed towards unlocking the country's roads, railways, and airports. The move will facilitate the smooth movement of people and goods, which in turn is set to stimulate trade within the region. Now, the average South Africa worker is spending more than 57% of their monthly earnings on transport and electricity, while underspending on food. The latest Household Affordability Index report compiled shows that economic justice and dignity paints a grim picture of how low-income earners are unable to feed their families with nutritious food. The index, which tracks the prices of 44 basic foods from 47 supermarkets and 32 butcheries in Johannesburg, Durban, Cape Town, and other parts of the northern parts of KwaZulu-Natal and Springbok in Northern Cape, shows that in January, the average cost of the household food basket stood at about 5,433 rand, increasing from 5,324 rand a year ago. Potatoes, onions, chicken livers increased by 5% or more in January, while maize meal, sugar, beans, sam, cooking oil, tea, beef, carrots, fish, and apples increased by 2% or more. Now let's go to Zimbabwe. There, the Reserve Bank of Zimbabwe has introduced a series of bold monetary policy measures aimed at promoting the use of Zimbabwe gold, one of which is increased interest rates on savings and time deposit, and the elimination of charges on transactions valued at $5 or its equivalent in the ZiG. Addressing journalists and bank executive in Harare, they emphasized that the central bank's interventions anchored on a tight monetary policy stance and have been instrumental in maintaining exchange rate and inflation stability. ZiG savings accounts will now earn a minimum of 5% interest rate, and that's up from 3.5%, while time deposits will attract 7%, up from 5%. Similarly, US dollar savings accounts will now offer a minimum of 2.5%, up from 1%, and time deposits will attract 4%, up from 2.5%. And the executive is urging banks to offer depositors rates above these minimums to foster confidence in the banking sector. But still in Zimbabwe, where the same Reserve Bank now made us know the foreign currency reserve that surged by 87% and is now at $550 million US dollars. At inception in April 2024, the Reserve Bank of Zimbabwe claimed that minerals and foreign currency reserve backing up the ZiG stood at $285 million, way above the thresholds to defend the local currency from unforeseen uncertainties. The reserves consist of foreign currency and precious metals, mainly gold, from mining royalties, direct currency purchases from the interbank market, and outright gold purchases. The central bank said the reserves accumulation strategy is centered on ensuring that at any point the ZiG component of reserve money is fully backed. Based on the current trends of foreign exchange inflows, including in-kind royalties, the RBZ believes that the reserve accumulation strategy for 2025 will result in significant improvement in foreign reserve holdings at the Reserve Bank. And still in Zimbabwe, the Reserve Bank has announced a further reduction in export retention proceeds, cutting them by an additional 5% as part of measures aimed at boosting foreign currency reserves and stabilizing the economy. The new directive, which will see the retention level drop from 75% to 70%, comes amid growing concerns over foreign currency circulation and exchange rate volatility. The governor of the bank explains that the reduction in export retention proceeds was necessary to augment the supply of foreign currency in the market, thereby stabilizing the interbank foreign exchange market and building the critical reserves needed to anchor the ZiG. For exporters who do not immediately need the additional 5% of their export proceeds in ZiG, the RBZ will offer an option to invest those funds in a US dollar-denominated deposit facility, which will be controlled by the central bank. Further tightening measures include directives from four banks and payment system providers to ensure that all businesses, whether new or existing, are issued a point-of-sale machine or another approved digital mechanism to facilitate transactions in both the ZiG and the US dollar. I guess we can leave Zimbabwe for now and go to Kenya, where the electricity generating company KenGen PLC has reported a 79% growth in profit after tax for the 6 months ending 31st December 2024, accentuating the company's resilience in a shifting energy landscape. The NSE-listed power producer posted a net profit of 5.30 billion shillings, and that's up from 2.96 billion in the same period last year, again primarily attributed to enhanced operational efficiencies. At the same time, KenGen achieved a 49.4% increase in operating profit, reaching 6.65 billion from 4.45 billion in the previous session. This improvement is fueled by a 13.7% reduction in operating expenses, which fell to 7.67 billion shillings from 20.47 billion. Revenues, on the other hand, remained stable at 27.5 billion. The company's financial income rose to 2.45 billion shillings from 1.87 billion, augmented by higher returns on cash investment and more stable Kenyan shilling. Now let's head to the crypto space. I saw some interesting stories just before coming on air. I hope they're still interesting. Before that, let's look at the price. What's the price looking like? Seems to have gone back into the red zone. So we see it at 97,502 is what we see. So in the last, I think, an hour or so, indicates this 1.49% drop. Ethereum is also in the red. Solana in the red. Solana is also in the news, I believe. XRP and a whole lot more. I think there's a stable coins a bit in the green, but the green not looking very impressive at this time. But we can live with this. We've gone through worse, I guess. Let's look at the headlines at this time. So on February 7, that's today, Hamsterverse, yes, Hamster is back in the news. They announced the launch of their platform, which will utilize the Hamster's token across all its apps and dApps. Immediately following the announcement, we saw Hamster experience a significant price surge at about 10 a.m. UTC. It was trading at $0.15, but in about 30 minutes, we saw it had gone up from 0.15 to 0.22, marking a 46.67 increase within just 30 minutes. The trading volume also saw a substantial rise from an average of 5 million traded per hour to 15. But we don't know if that's going to be sustainable. Hamster, we know what it did to a lot of people last year, whether you are disappointed or not. Everybody have their own story. So the other story also making the headlines today is the United States Securities and Exchange Commission acknowledging Solana as Solana has made a significant step towards approving Solana and their Litecoin Spot Exchange Traded Fund as their ETF, marking a change in how the agency approaches the crypto industry. So I think last year they said was a regulation year. Was it this year? But we see a whole lot going on there. So this is the first acknowledgement for Solana ETF. Or this happened on Thursday. They officially did acknowledge that, and it triggers the agency officials' timeline, typically a 240-day process with multiple decision deadlines, and is considered a second stage. And then there's the most interesting, I'm sorry if that's my perspective, in El-Salvador, the first country to adopt Bitcoin as their legal tender. They did that in 2021. Now they have reversed that decision, and they say it's pressure from IMF. There you go. El Salvador ends Bitcoin as their legal tender. Let's talk to Olumide Adesina now, find out if he has heard anything new about this. Hi, Olumide. Good afternoon.
Yeah, good afternoon, Hini. Thanks for having me.
Good to have you. So what's going on with El Salvador? They say it's pressure from IMF. I mean, has it done any harm to their economy?
Yeah, unsurprisingly, you know that the IMF had weighed on El Salvador being the first country making Bitcoin as legal tender, and one of the conditions for support in the Latin country was that they should change that narrative. Well, while El Salvador made some concessions, recent data shows that they still additionally bought about 60 Bitcoins. And in 2024, they made a profit of about $333 million on their Bitcoin investment. So primarily, it shows that Bitcoin has added color to that economy, has brought in big players like Tita. Tita is one of the biggest stablecoin issuers in the crypto space. They've already domiciled their headquarters in El Salvador, and also the country has an immigrant strategy where high net worth people can in the crypto markets can really stay. So while you look at the fact that IMF has some wins in the fact that they've stopped using Bitcoin as legal tender, the narrative around the crypto space with El Salvador still remains.
Yeah, but it doesn't mean that it's going to be like totally banned also. So even though it's not a legal tender, do we have an idea of how they're going to use it, perhaps in parts and maybe not fully as a national legal tender?
I think if you look at the the pathway that has already been created by Donald Trump. He has brought in a pro stance on the crypto space, and that has boosted the morale of many countries, particularly those that really like the crypto assets. If you look at Czech Republic, for example, the president cancelled capital gains on Bitcoin for at least 3 years. And going back to El Salvador, I think Bitcoin would definitely play a key role as strategic reserve. This is a country that recently announced that water and electricity was free for at least for about a month. And looking back at Nigeria, you see that our sovereign fund has performed less than what you've seen in El Salvador. So I think the narrative now is that it's more going to be like a strategic reserve, a store of value, rather than a payment facilitator as they planned. And also the fact that it has also put the country in the face of many news channels because of their Bitcoin stance. They will not want to lose that.
So, but on the other hand, does it mean that the IMF is averse to virtual assets?
Definitely, the IMF are not easing their stance against the Bitcoin and crypto market, though they've been more flexible of late as the functionality around the space becomes more integral in traditional finance. You could recall that even the European Central Bank discarded using Bitcoin as an holding reserve for the bank. So yes, there's still growing concerns about Bitcoin volatility, and that also played out if you look at this week and last week, you saw that Bitcoin has lost about $10,000 in a span of few days, and that really shows its unreliability as a store of value, high volatility, and concerns among key players that it's also a conduit for illegal financing still makes the asset very tough for adoption in institutions.
So, looking at the horizon, any possible thing to pop up Bitcoin in the nearest future? We're just going to continue with this volatility that we've been seeing.
Yeah, but I think the future for Bitcoin is bright. The world largest asset manager, BlackRock, which portfolio of 12 trillion, had increased their buying pressure on MicroStrategy Ton Strategy, the biggest corporate Bitcoin holder. Also, the same asset manager has about $50 billion worth of Bitcoin in spot ETF. So you can't really bet against that asset. I feel that the organic growth of Bitcoin will definitely take shape, but I'm wary about the fact that a lot of people feel that Bitcoin will hit about $1 million under President Trump, which I think is an exaggeration.
All right, thank you so much, Olumide, for sharing your perspective on that exaggeration and a whole lot more. Olumide Addition, financial markets analyst.
Thank you very much, Jenny.
All right, so that's it for this week today for the program and then for the week. Thank you so much for being a part of these 55 minutes of journey around the world of business, which we do every weekday. We hope to do it again next week, God's grace. So do have a restful weekend, but remember that you can always stay informed by going to our YouTube channel and look out for Business Morning and Business Incorporated, and you can relieve all of the moments right there. I'll see you tonight for the stock market report, and then I will be having a restful weekend. I'll see you next week. Bye-bye.